Okay, ex-traders, we are going to do a quick recap of uh, it's a well-known strategy. It's not that big a deal, but uh, it's basically aimed at jittery traders or paper hands traders, as you might have heard us being called. So what I'm going to do here is I'm going to review a trade which was alerted to at the X-Trades Discord, and the trade was, and don't mind this bottom leg here. Let's focus on this top leg. It was a long call for Netflix. This was on December 11th, I believe, somewhere around November 11th, somewhere mid-November, and the call was made that in about 20 or 25 trading days, Netflix was going to be at or above, above 330. Okay, so that was the call. Now, normally, a lot of traders, especially jittery traders or newer traders, will look at a $567 long call alert and say, "Oh, that's too big for me. Yeah, it's too rich. I'm not into that." And you will either you'll do one of two things. If you think that's too rich for me, you're not going to take it, and it might end up being a very good trade. And or number two, you'll say, okay, I'll get into it, 567. And this is when the alert was made. This was the day, basically, which is probably what the analyst saw, this bullish hammer bouncing off of, sorry, that's the wrong, here we go, bouncing off of let me zoom in on this, bouncing off of what seems to be the middle of that trading channel. All right, so you see how it's been trading in a range. So the analyst saw this bullish hammer and decided this thing is going to go up, past 320 over to 330. That is what the analyst more than likely saw, and he decided to take the 567 call. Now, like I said, maybe you can't stomach $567, and so this is the strategy, which basically takes a single or a naked call and turns it into a vertical. Okay, and so how do you do it? Well, the alert was for the 330 call to be bought, to go long. What you do is you sell the same dated call at the strike above. Okay, so this would be the 335. Now, because it's above the 330, then it's going to be much cheaper. But in this case, you're getting 467 on top of having paid 567. So what is your total risk? It is no longer $567. It is only $100. And what does that mean? How does that help you? Well, basically, if you're going to swing this from mid-November to December, you're going to have a lot of sleepless nights wondering if this thing is going to make it to 330. Some days it might go up, some days it might go down, and basically, if you're jittery, a jittery trader like myself, then you won't stomach this, and eventually you might end up selling for a loss. Okay, because if this thing goes from 567 to 500, you've lost $67, and you start thinking, well, it'll recover. It'll make it back. It'll bounce back, and then it goes to 450, and you're like, oh man, well now I've lost $100 and so. I'm not going to sell now. It'd be ridiculous. I have 20 more days left to go. And then next day, it's down to $350. And you're like, I'm definitely not selling now, not for $210 or so that I've lost so far. I might as well just write it out and see what happens. And trust me, more oftentimes than not, you'll go from 567 to zero. If you don't have the experience, if you don't have the trading plan, because this was an alert that was given at the Discord community, it wasn't your own. So it's possible that the analyst had other tools that helped him gauge that this was actually going to go up. It's probably not going to go up, in a straight line, as it surely didn't, and therefore the anxiety gets the best of you. Okay. So what happens? Well, what happens is the next day you're happy. So you get some good night's sleep. That's great, but you got to keep swinging this thing. And so the day after that, you're like, okay, well, now I'm break even, possibly. And then the day after that, you're like, oh boy, this is getting serious. And then the day after that, it's like, oh my goodness, this thing is going nowhere. And by that time, this thing is down like $100 or $200, and you're like, well, might as well let it ride. All right. And if you don't have a trade plan, that is a big mistake. So what do? You turn it, like I said, into a vertical spread. And how does that work? Again, you already bought a 330 call. What you do is you sell a call for the strike above for 335. Now remember, this gives you the right, if you want to buy at 330. So if this thing shoots up to 400, you're golden, because whoever has this contract has the right to buy at 330, and they can turn around and sell it at the market at 400. But this thing is gone worthless, because what this does is it obligates you to sell Netflix shares at 335. If they're worth 400 in the market, why would you buy at 400 and then be forced to sell at 35? It's worthless. So what happens is basically you pay 567 and you receive 467. One of these two is going to be in the money or out of the money by expiration. And that is basically what you do is you reduce your anxiety, because now you're not worried about losing $567. You're only worried about losing 100. And 100 is a number that you can sleep with at night. If this thing goes down to 100, like it did in my case, right around here, then I thought to myself, this is fine. This is fine. I'm good with losing $100. I'm not good, but in losing $567, but I'm definitely okay. At least, I'm a lot better off if I'm only down 100 than 567. So what this strategy does, is it allows you to basically sleep well at night. Okay, that's basically the net effect, is that because you sleep better at night, knowing that you're only risking 100, which is actually true, then you can stomach these downturns, so that when this happens, you're ready to sell. All right, and that is indeed what happened. I bought it here. I bought the vertical, which means I bought the call and I sold the call, and it went up the next day, and I was probably up about 10, 20 bucks, I can't remember, and then boom, 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 I was down 100. But 100 is okay. If I would have been down, and I could check, I can't remember, but I believe if this thing went down to something like, I believe it was like $200 or $100, so that would have meant that I would have been down $300 right here. So if you're here and you're down $300, you're probably thinking it's time to bail, or let's lose some more, because might as well. Let's risk it. We're already down 300. Let's see if we can recover. And then this thing tanks, and then you're out $567. But if you're down at this position and you're only down 100, then you're willing to let it ride a bit more. And that's the whole point of the vertical spread. All right. Now, there is obviously a trade-off, and the trade-off is that you're not going to make as much money, because if this thing goes from 567 to 667, you've made $100. Great. But if this thing, goes up, it's because the stock went way past 330. But that means that this one will be a loss. Why would it be a loss? Because it's below 335 at some point. If it keeps going up, if it keeps going higher, then basically this thing, 467, is going to be worthless. So that's what you basically do. That's how the trade-off works. You're going to make money with one of the two. All right. So that's a very good strategy to use if you find yourself getting out of trades for losses that were probably once green, or if you find yourself, the alert is made and then you get out, and then an hour later the analyst says, oh, what a nice run Netflix had. We got out just in time, 200% or 180%, and you got out at minus 50. So this is a very good strategy to use for new traders, for jittery or anxious traders that are still working on their education, on their learning path, and you don't have enough tools, you don't have enough experience to recognize price patterns, individual candlesticks. I was talking earlier with somebody about ATR, which gives you an idea of how much this thing can move. If you're going to get a 330 call, it's because Netflix is capable of going, up, about what, 30, 40 points in 25 days. If it's a stock that moves very little, then it's not very likely that it's going to reach 330. All right, so if you know those things, then you're probably a lot more confident with a 330 call. All right, so that is my recommendation to you guys. I'm going to be doing this a lot for the month of December. I've already gotten into one today on Baidu, and it was a naked or a single call, and I turned it into a vertical as well. So I'm going to be posting that somewhere down the line in the month of December. Okay, so how did this trade end up? Well, I have the capture right here. Basically, after it did this, because I sold off when it reached the top of this trend line, again, expecting this to bounce back down, I ended up about 40%, 40% profit after being down $100, which is basically 100%. Okay, so that is the beauty of this strategy, and I really encourage you guys to try this out. It'll do you a world of difference, and it'll definitely put your nerves at ease. So I hope you enjoyed the video, and see you in the next one.